All right, guys, back to work. Back to work. Boy, pretty good day today. Found some nice trades this morning in our morning trade room. Hope you guys made some money as well. But now it's back to work tonight. We get some more big news coming tomorrow morning. We got more big corporate earnings tomorrow afternoon. And you can probably notice, right, we made a big move down today. And you know, anytime we see a big move like we saw today, there are some really easy ways to make money the following day. I get some breakout pullbacks, some grind breakouts, and my favorite trade for tomorrow is a slingshot reversal. We'll see if we're lucky enough to get our hands on some slingshots tomorrow. I'm going to go over all the details, including that slingshot reversal in the video tonight. I'm going to make sure you guys have a game plan to make some money on Thursday. Now, before we jump in and get the party going tonight, make sure you subscribe to the channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos here tonight, do me a favor, hit that like button for me. Give me a shout out down in the comment section below. Thank you so much for tuning in, supporting the channel. Boy, fantastic week. Let's get this session going, get the video going here, and get ready for Thursday's trading session. Now, starting off as always on the 60-minute time frames, the Nasdaq and the triple Qs. I got the Emini and the SPY. Remember, guys, I like to use these 60-minute charts to plan my trades for the following day. Later on in the video, I'm going to drill down to some tick charts. Tick charts are best for entry timing, make the entry timing a lot easier. So we'll start first and talk big picture on the 60-minute, and we'll drill down and get our hands dirty on some entry tactics on the tick charts as we go deeper into the lesson here for tonight. What are these 60-minute time frames telling us right now? Well, there are three big clues on the 60-minute. First clue is we've made a very big move down here on the 60-minute. Anytime we see a big move down like this, we have to think that sellers are probably not trying to chase this thing and take it lower. We can't imagine a lot of bears waiting down there after such a big move. Second clue is a trading range. Remember, ranges act like magnets. Ranges love to break out, pull back, and we also have big time lows here on the 60-minute charts right now. The big time lows on the 60-minute charts are what leave the door wide open for that slingshot reversal I mentioned earlier. So three important clues right now on the 60. Big move, range above us, sitting at major support. When you put these three clues together, they tell us there are three different types of situations or setups to be looking for tomorrow, and I'm going to go over all three of those to make sure you guys have a roadmap to make some money on Thursday. Now, before we jump in, though, and talk about those three trades, we'll definitely talk about the slingshot reversal tonight, absolutely. Before we dive into the tick charts, though, let's take a look, though, first here at the schedule for tomorrow, because tomorrow's a pretty busy day. We've had a busy week all week here tomorrow. There are three things you want to keep on your radar for tomorrow. First things first, around 8:15 and, well, sometime between 7:45 and 8:15 tomorrow morning, we're going to hear from the ECB. Just like the FOMC here in the U.S., right? The ECB has a meeting tomorrow morning. Everyone expects them to hold rates and pause. First time in 10 meetings, I believe it is. So that's definitely on our radar for tomorrow. Just after the ECB comes out, we're going to hear from durable goods and the GDP report tomorrow at 8:30 Eastern time. The GDP number is undoubtedly the bigger number of that group, but you'll notice there's a bunch of news coming out at 8:30 Eastern time. So I want to keep that on our radar as well. And you probably know this already, but in case you aren't aware of this, we have what is arguably the biggest earnings of the week tomorrow after the close. We all know the name Amazon, right? We'll see what we're going to hear from Bezos and the rest of the crew over on the Prime shipping to Amazon tomorrow for night. As you can imagine, that's definitely something we're keeping on our radar tomorrow afternoon. And I would imagine tomorrow night we come back, we'll have a lot to talk about tomorrow night after the Amazon report comes out after the close. So keep those three items on your radar. ECB in the pre-market, heads up on that if you're trading pre-market tomorrow morning. Durable goods, GDP, and again, we got Bezos and crew reporting earnings tomorrow afternoon. So those are three things I'm watching here for tomorrow. Now, let's get back to our charts, though, because it's good to know when the news is, but we all know this, right? The money is made on the charts, why don't we now go over my favorite trades here for tomorrow? We'll start off first here on the E-mini and the SPY, and we'll wrap things up tonight on the Nasdaq and the triple Qs. Just be aware, the S&P and the Nasdaq are very similar, so pretty much everything is interchangeable here on these two charts tonight. As I mentioned in the introduction, there are three clues right now. One is a big move down. Big moves, anytime we see a big move in one direction, we have to think, are there really going to be a lot of bears down here? They really want to sell low. I get it. Earnings season, anything's possible. But in most cases, when you see a big move in one trading session, it's very difficult to justify selling right at that low. So that's one big clue for tomorrow. The second thing is this range, right? Now, if you guys are taking my free classes, if you're a student of mine, you know that ranges, right? Ranges act like magnets. Ranges love to rotate back up. We call those slingshot reversals. They also love to break out pullback, right? It's definitely something we're tracking here for tomorrow. And of course, the third clue we have is we're still sitting on, well, we're a little below now, right? But we're definitely below that low now, but right around that big low from late September, right? Early October here. So when you put all three of these clues together, you get really three different scenarios I want to make sure we are ready to profit with tomorrow. The first one's called what we call a grind breakout. If you're a student of mine, or if you've taken my free classes, we see a lot of examples of this in the free video course, right? Pop and grind. Pop and grinds are very, very easy, and we'll talk about how to trade a pop and grind tonight on the video. One of the easiest ways to trade a breakout is what we call a breakout pullback, right? The range above us, a breakout pullback. Now, there's one really easy clue we use on a breakout pullback. We'll talk about that as we go deeper into the video. And like I mentioned earlier, because of that big support, because of that big move down, there is certainly potential. I know we're very bearish right now. You can easily see that. There's always potential, though, after a range breakout with a big move for a slingshot reversal. As you can imagine, we're very bearish right now. So slingshot reversals, there's there's two different ways I'm going to trade it here for tomorrow. So we're going to cover that as well. As you can see, we have a lot to cover in a very busy video here tonight. Again, three possible scenarios. I want to make sure you guys have a game plan for tomorrow. Now, over to our tick charts. Remember, tick charts make the entry timing a lot easier. This is a 7,000 tick chart in the upper left-hand corner, and that, of course, is the 21 EMA. If you're tuning in and watching for the first time, you'll notice right now on the tick charts, we have a big move down into a trading range, and we, of course, are at support underneath that trading range. As I mentioned earlier, it's unlikely. Now, again, I get it. It's earnings season. We're very bearish right now. This could continue easily going lower. But a lot of times you see these big moves in one day. It takes a lot to convince sellers to sell low down here. So that opens the door for that slingshot reversal. And later on in the video, we'll talk about the grind breakout, the breakout pullback, and of course, if we do get that slingshot reversal, how to short this thing back down or into that trading range. So we have a lot to cover. Let's get into it. First things first, we're at support underneath a trading range. If I want to buy on the way into a breakout pullback, right? A breakout pullback is something on my radar for tomorrow. I can be a buyer on that with a very specific entry pattern. I can also look for that slingshot reversal with a very specific entry pattern, and the entry pattern is one of my favorites. I know it's a lot of you guys love this one as well. It's called a crown reversal. Now, inside my free video course, I talk about two patterns. One's called a failure and one's called a trap, right? Those are two of the four patterns we teach in the free video course. If you put those two together, you get what's called a crown reversal. This is a pretty simple pattern. It's a higher high in price and a trap below that low. This is the setup I will look for to basically pick these bottoms during either that slingshot reversal, right, or during that breakout pullback. So for example, if we were to continue going lower here overnight, Bears come in, try once. Bears come in, try twice to go lower. We now, remember, again, anything's possible, but that move down right now, it's tough to think that sellers are going to be trying to sell that low. If we can get them roped in there and use their stops, right, to fuel that move, that's that failure pattern we teach in the free video course. And most importantly is we can get underneath that low, we can grab that bear trap. We talk about traps, of course, in the video course as well. Again, I call these crown reversals higher high in price and a trap entry right below that low. Now, as part of a slingshot reversal, we then start looking for the rotation going back up in the opposite direction. If this thing begins to slingshot and run higher, it's going to want to take out other side of the range and make a pendulum swing up on the other side. As it rotates higher, we then start looking for basically bear traps, higher high in price, trap below that low. These are, in a nutshell, again, I call this a crown reversal pattern. In a nutshell, these are the same pattern, right? Higher high in price, trap below that low. I call these crown reversals. And again, this would be a bear trap. Strong run up, higher high in price, and a trap below that low. Where would target be on that slingshot reversal? It'd be up around these highs. And then later on in the video, I'm going to talk about how to short this thing back down again, because ranges, as many of you guys know, ranges love to rotate back and forth, right, up and down. So those are the two patterns I'm looking for as part of that slingshot reversal. And by the way, I know a lot of you guys know these patterns already, but if you're here right now watching for the first time right now, this might be brand new to you. Not to worry, I teach all of these patterns, crown reversals, failures, traps. I teach all of this, and I have hundreds of examples of these setups inside of our free video classes on the website. I'll put a link up there for you in the upper right-hand corner. Grab that link, take that free video course, because the strategy you'll learn in that video series will teach you a stupidly simple trick we use every morning in our members trade room to know exactly where the best winning trades are going to be that day. And most importantly, I'll teach you 4 of my favorite entry patterns to help kickstart you making money each day. I'll tell you, if you're not making consistent money right now, if you're tired of missing the best trades each day, hit that link that popped up there. Take that free course. It's perfect for someone trying to make the jump into full-time trading. And also, by the way, too, if you can't grab that link, I'll put all the important links down the description of the YouTube video tonight, the free class links, and also too, I'll put my Twitter feed down there too. I post updates throughout the day each day on Twitter, so find the important links down there in the description if you want to learn more. Now, there's one more type of pattern I'm going to talk about here, and again, as we go deeper, I'm going to talk about the grind break and the breakout pullback as we go deeper here tonight. Now, let's say, for example, we get this market rolling lower. We get that breakout pullback, right? And they retest that low. I'm going to talk a lot more about breakout pullbacks here in a moment. Don't you worry. If we retest that low now, remember, anytime we see a strong move down like this, the odds are pretty good they pull back and retest the low. If I can get the bears trapped in once, trapped in twice, I can use what we call a failure into pullback combination off of that low. We talk a lot about this in the video course, right? That failure, this would be a 2-try failure, as you can see, a failure, right, into a pullback combination. So just be aware of that, right? I'd like to get that crown reversal off that low and get this thing ripping, right, running back up with that slingshot reversal. But if we do end up pulling back and retesting that low, just keep an eye out for that double bottom, right? That double bottom reversal, as we call it, and look for those bears to come out and try once and try twice. And we're going to go out and buy right into those stops, right, for that squeeze going back higher. Remember, big move down. It's tough to imagine more bears are going to want to sell after such a big move down. Now, I had a great example of this morning in our morning trade room. If you watched last night's video, we talked about how we were trying to buy underneath these big swings. As the market ran lower, the bears tried once, the bears tried twice. That was our initial look, right, at that trade long. They wind up going lower. The bears try once, the bears try twice, right? And this is a great trade today in the morning trade room. I wanted to go all the way up, obviously, right, end up rolling over this afternoon, but a really good example of how at support levels we can trap the bears in like that, right, and then squeeze their stops running higher. A lot of students this morning made some pretty good money on that 2-try failure, right? So running lower, 1, 2, and squeezing back up in. All right, now we've covered now the slingshot, right? How we slingshot back up into this trading range. Let's now talk about another scenario that we may see for tomorrow as well. And that, of course, is that pop and grind. Again, later on in the lesson, I'm going to talk about if we go up, how to short this thing back down again, because there's 2 specific patterns I want you guys to be ready for. One of them may continue because we have that big range above us on the 60-minute. Now, let's talk about pop and grinds, right? Pop and grinds. When it pops and begins to grind down like this, okay, that could easily happen tomorrow, right? It's earnings season. Anything is possible. If it begins to grind down like this, we then go out, we draw a trend line off the low, we pin that trend line up around the high, and then most importantly, we look left and we find prior swings. And this is where the entries will come in off a pop and grind channel, right? Pops down, grinds down. Now, I'm going to keep it pretty simple right now. This could be a bull trap, like I'm showing right here. One of the most common entries is like this, where it'll pop up, it'll get above the 21 moving average. The buyers will come in, they'll try to buy it. All of that momentum is so bearish at that point, and we'll get that failure back down to retest that low. Now, what do you think? Once I retest that low, could we now go in and rope those bears in 1, 2, and use another one of those 2-try failures, right, to squeeze back up? Absolutely. So keep an eye on that pop and grind as we go lower. And remember, I'm keeping it simple right now, right? It could be a trap. It could be a failure. Any of the entry patterns you guys are learning in the free video course can be applied off the top of that bear channel. Now, let's talk about a breakout pullback. Okay, breakout pullbacks are very common whenever we see a really strong breakout out of a trading range. Now, I mentioned earlier, there's one kind of important clue that we use for a breakout pullback. It's called a measured move or a measured breakout. All right. If you guys are in my free video class right now, we talk a lot about measured moves. Measured moves pretty simple. The breakout leg of a range will then become the measuring leg. So we don't have enough information about it yet, but if we keep going lower, remember, difference between a pop and grind down, right? If it breaks out, which it has already, look for that measured move leg, right? We don't exactly know how big it will be yet, but that's the technique. Now, once I see that measured move, we then look left and we look for the underbelly of that range. The market will want to pull back, hit the underbelly, and back down to retest. Okay, that's the general idea behind a breakout pullback. It's a measured move breakout. That will tell you when to start looking for the pullback, ultimately. And then the underbelly of the range is the easy part. We already know where that is. And that's when we start looking for the short. All right. Now, as you can imagine, this could easily end up with a measured move going lower. We may then see those bears come in, try once, try twice. Remember that pattern before? That crown reversal. Right? We can easily use that as well. That's the way you pick bottoms during those pullbacks. And then as we get back into the underbelly of that range, there will usually be a channel coming down as well. We'll add the channel, we'll add the low of that trading range. And most of the time, what will happen is it'll get up. The buyers will think this now is a reversal. They'll try to buy this. Remember, it's probably not going to be a reversal unless we start popping and grinding, going higher. Hold the underbelly of that range. Let's get these buyers to come in and try to buy this. If those buyers come in and try to buy it, we can now get our orders in and sell right into stops for a failure into pullback combination back down to retest the low. And again, I would love to get that double bottom two-try failure and squeeze back up again. This is my game plan on a breakout pullback. Again, remember, we don't know enough about it yet, but think about a breakdown, measured move. Once we see the measured move there, then think about trapping in those sellers, squeeze their stops with that crown reversal pattern, and then as it pulls back, right, as it pulled back, look for those buyers to step in and just sell right into their stops for a run back down to retest the low. Once we retest the low, remember, the professionals are selling high. These are rookies down here selling low, right? In these areas, everyone is buying. Why I say that is because the bears who got short, they're taking their profit at that low. Buyers are buying low because that's what buyers do. And if we can trap in some rookies down there, we can smoke those stops and get that squeeze back up into the underbelly of that range and potentially leave that runner up in that range up overhead. All right, guys? So now we've got a pretty good plan of attack here. I think we do. Hopefully it made sense tonight. There's a lot of moving pieces on the chart right now. So one, again, is that slingshot. It's a crown reversal, and then what will happen is it'll punch, run up, higher high in price, and grab that trap on the way up. Up to where? Up to highs, right? Up to pendulum swings, back up overhead. A lot of examples of those in the free trading course. If it pops and grinds, running lower, we mark the low, we mark the high, we go look left, and we give it, right, a short off the high. Could be a bull trap, could be a buyer failure, could be a pullback combination. And again, if none of that makes any sense to you, hit that link up top, the upper right-hand corner, and you'll learn more of the techniques and the details I'm talking about here tonight in that free video course. The third one is the measured move, right, into the breakout pullback, right? And there's kind of three ways we trade that. One is that crown reversal at the measured move. Two is that bull trap or that buyer failure, right, on the way down. And the third one is that double bottom reversal off of that low. Plenty of ways to make money with this if we indeed keep going lower. Now, the next step is I want to talk about what to do here as we go higher, right? If we get this run going higher here, because there are kind of two, maybe three different scenarios I'm getting ready for if it does end up rolling higher here. Let's now transition now to the Nasdaq, right? The Nasdaq is pretty much the same thing here now as the E-mini. I feel bad because I haven't given the Nasdaq any attention yet in this video. We trade both of these markets every morning in our morning trade room. Over on the Nasdaq, three big clues, right? A big move down into major support on the 60 with, of course, that range up overhead. Let's now drill down now to our tick charts, and you can kind of see the exact same thing. I laugh because that big gap down you're seeing right now, and again, those are the big clues we have on the chart right now. That is a really, really big move down. Well, look at this. That was a big move down today. Right? It's pretty incredible to think they're going to keep going lower here. Remember, anytime we see a big move down like this, we have to be very suspicious. We're probably not going to have a lot more bears willing to sell down here, right? You combine that with some major support on the 60 and a range as a magnet overhead, and this is where you start getting that potential for that slingshot reversal, that pop and grind down, or that breakout pullback that we talked about here a few moments ago. The most important thing now, though, is that what if we do get that slingshot running higher? The most important thing is that if we do end up going higher here, you have to think there's going to be a lot of bears waiting above these highs. So my goal is that, remember, whenever a market rotates higher like this in an overall bear market, there's one type of entry pattern we're looking for, and those are bear traps. So even if we didn't get, for example, that crown reversal, right? If we get this market now running higher here, the pattern you want to look for is that run up, that higher high in price, and that bear trap. These are very simple patterns. They don't need to be very complicated. It's that higher high in price that is the giveaway, right, on that trap. Now remember, we have to keep an eye on the underbelly of that range. So get me through it. Give me that higher high in price and that trap, right? That's the key, right? That's the key to getting into it, right? Getting buying as low as you can, right, on the way back up into that trading range. Now, if we end up squeezing and slingshotting off of that low, I call these slingshot reversals because what oftentimes happens is it overextends and it slingshots back in the opposite direction. And remember, we have all that space up there until that 60-minute range up there, right? That range is all the way up at 14,699 right now on the tick chart. That's all the way up there. So this could easily snap and run higher. I realize right now things look pretty bad here for the bulls right now. But remember, this is earnings season. Things can change very quickly here right now. So if we end up all the way back up above, we get that slingshot back up. This is a great place to sell short, right? I'm at resistance. What's the problem though? The problem is momentum, right? This will be a very, very strong run going higher. And let's not forget, if we pop back up above these lows right now, we're sitting now above all that key support on the 60-minute. Now, we talked about the crown reversal to get long off the low. That's exactly what we want to do as we go higher here, because as we go higher, there are two scenarios you'll be ready for. One is that move back down into the trading range. To do that, we need to trap the buyers in, right? Because again, momentum is very strong in that situation. So let the buyers try once, let those buyers try twice. And remember, it's a lower low in price, followed by basically a bull trap above the high. Lower low in price, and that strong signal candle, we talk about that a lot in the video course, right? That strong signal candle for that run back down again, right? Again, I call these crown reversals. It's basically a two try for the buyers and a bull trap to trigger the entry. Now, the second scenario we're ready for is if it pops up and begins to grind. Okay, the grinder. I talked about this earlier on the move down, right? If it was to continue, for example, grinding down like this, right? We draw that trend line, mark that channel, and we short the pop right off the top of that channel. These are very reliable setups. They're very reliable setups. We saw one today here on the Nasdaq, right? Pops down, grinds, channel high, sell off that high. Very simple pattern, right? If you know what you're looking for. So if we end up popping up here and we begin to grind, remember, ranges love to rotate. They'll usually make a symmetrical rotation, right? So we start to look at where that rotation may go. It can easily line up with some previous levels of resistance. On the way up to that area, though, we can now draw a trend line off that high. We can bring it now off of that low. And as I said earlier, look left, find some prior swings, and my favorite trade is getting underneath that prior swing and looking for a bear trap like that. We might get underneath the 21 moving average, right? Trap the bears with a failure pattern, right? Failure into pullback combination, but that's the idea behind it, right? That's that pop and grind reversal. And of course, this could easily with that 1-2 crown reversal off the low, could easily squeeze. Again, we assume the bears will try to hold the underbelly of that range. If they don't, and we grind through it, bingo, that's your giveaway. Mark that high, mark that low, look left, find those prior swings. And again, any of the entry patterns you guys are learning right now in the free video course could be a trap, could be a failure, could be a pullback combination. Probably not going to be a strength trade because we have to expect sellers up here waiting up above those highs here. And then one thing I'm watching as well for tomorrow is that oftentimes when we get those pops up, they'll double top and come right back down again. So we'll keep an eye out for a double top reversal as well. If we were to pop up, grind, get that channel, right? Get that deep pullback, right, to buy off that low. If we start seeing that double top, right, that's where we'll take the bulk of the position off at that retest the high. We're buying that pullback off that low. If I start seeing these buyers struggle once, twice, that's where that double top reversal can come in back down again, because again, we're not a bull market overall. We're a bear market overall, right? Just like as we go lower, we pull back, breakout pullback, and they retest that low, double bottom, right? We're not going to sell down there, right? But if we start seeing bears come in and try a couple times to get short, bingo, that is the double bottom reversal. It's nothing more than a retest of that low, 2 tries for the bears, and a squeeze back up again. If we end up all the way back up, right, we pull back and retest that high. Remember, overall bear market, now we're up off those lows now. Now we come in, trap those buyers, give them once, give them twice. The reason why we like to see 2 tries is because what it does is it gives us stops, right? It puts the stops right there. And the stops, what are the stops? The stops are fuel, right, to run this thing back down again. Again, I call them double top reversals to keep it simple on these videos. It's a 2-try failure off that high in an overall bear market. All right, guys? Boy, we've covered a lot in this video right now. I almost didn't go over a lot of this stuff tonight because I didn't want to overcomplicate things, but there's a lot of potential, a lot of possible scenarios here for tomorrow. Here's the good news though. Tomorrow morning, 8 o'clock Eastern time, we're going to get together and trade these markets together tomorrow morning. The game plan's ready. We covered a lot, but tomorrow morning, though, we'll do it together. I can't think of any better way to learn this than to come out and trade with me every morning in the members trade room, 8 o'clock Eastern time. I'll put all the membership links. I'll put the free course links. I'll put the Twitter feed links all down in the description of the video. I would definitely recommend start first on the free video course, right? That'll get you warmed up, get you ready, and then sometime soon, hopefully I'll see you sometime soon, trading with me in the morning trade room. If you have questions, if you got concerns, or if you got trouble getting access to our free classes, don't be a stranger. We're always here to help. We're only a phone call away or a live chat away from getting access if you need help getting into the video courses. All right, guys? So keep in touch if you guys have questions. In the meantime, fantastic week today. Didn't get that full reversal we wanted to today, but that's all right, though. Still have a great week so far in the morning trade room. Hope you guys did well as well. Now get some sleep out there. We'll see you guys tomorrow morning, 8 o'clock Eastern time in the trade room. If not, same time, same place tomorrow night. And we'll talk about Amazon earnings tomorrow night and get ready for a finally Friday trading session. Guys, thanks for watching all the way to the end. Be well, be nice to each other tomorrow, and be here next time. Adios, amigos. Bye-bye for now.